how is Bitcoin retirement now changing with MSTR, with STRC, and all those products?
Yeah, I mean, I think it just allows you to kind of diversify, right? I mean, at the end of the day, with retirement, one thing that you have to worry about is the volatility of Bitcoin. Bitcoin is a very volatile asset. So, I mean, let's face it, a lot of Americans or Europeans who are looking to retire, being 100% in Bitcoin, if you were at $120,000, what, 6 months, 7 months ago now at this point in October, or maybe I'm getting the months wrong, maybe 8 or 9 or 10 months ago, you saw basically your entire net worth get cut in half, right? So you need to wait and try to not sell Bitcoin during the bear markets, right? You need to try to level yourself out. So I think, these things, like I said, as like a business owner or somebody who's looking to retire on Bitcoin, you could have a significantly less amount of Bitcoin. And if you have some of these, aspects of your portfolio, like a stretch, or even if you just had some bonds or something like that, I mean, I truly believe that you need to have some sort of Bitcoin in order to retire, right? Because I've heard stories of people shutting off bank accounts, them, maybe the dividends aren't paid out, something like that, right? I mean, you might need some cash that you can be able to get and use at any point in time. And Bitcoin is a truly only decentralized, truly secure asset or thing that you can hold, right? I mean, whether it's rental properties or anything like that, even globally, you have to watch out for, all of these different geopolitical things. I mean, there's the list goes on and on of the benefits of Bitcoin, but, you know, you can geo arbitrage with Bitcoin very easily. You can stack a bunch easily as well. And I mean, let's face it, right? When you have 21 million Bitcoin, the average person, if we were divided by 8 million people or 8 billion people, you only get about 200 to 250,000 sats, which is, less than, a couple $100 now at this point. So just to get to that 1 million sat mark, I think that is, a huge milestone. I'm giving a talk on Prague as to why I think the new millionaire status is actually going to be 1 million sats, strictly because of how many people have Bitcoin on their balance sheet or a personal balance sheet, how many people have 1 million or more sats in their wallets just in cold storage. And if you look at the numbers, I mean, there's 62 million plus millionaires. By the time we finish this podcast, there will probably be close to about 100 new millionaires made by the time you watch this entire thing. And so, what are these guys doing? They're simply just sitting on their hands. They have their businesses. Nothing is really changing except that the dollar that you're sitting on is deflating away. And so, what is the easiest thing to get into right now with the lowest cost of capital that has the highest amount of asymmetric upside? It's Bitcoin, bar none. It's not even close to anything else. So you can retire on a simple just million sats here, I think, in the next 5 to 10 years. If you change your lifestyle a little bit and you just rush to get into that. A good friend of mine, Trey Sellers, he talks about this 4-year sprint. If you just buckle down and you get into this 4-year cycle, and you eliminate some of the overhead expenses, you just buy as much Bitcoin as possible, you'll be able to do that. And then, once after this 4 years, you can give yourself somewhat of a raise. And, there's a lot of communities that go out and look at how much how much you need to actually retire. And I think when you look at the amount of upside that Bitcoin has, it changes the rate that you need to in order to retire, right? I mean, there's the classic 4% rule that the financial independent retire early community uses. You could change that to maybe an 8 or a 10% rule of just all of your annual expenses, and then multiply that by, instead of 25, by 12 and a half or 10, and that just drops down significantly the amount that you need in order to retire. So then you can enjoy yourself on the beach with your family, spend times with your kids. I mean, it just changes the entire outlook. And all you got to do is just buckle down for a few years and save in Bitcoin. And I think that asymmetric upside, you'll be very pleased over the long period of time. So, I truly believe that the small amount, the million sats, the 0.01 Bitcoin, I screamed that at nauseum for me and my friends, people around our age, because I think, just that number, everybody thinks you need to get to 1 Bitcoin, and, 75,000 is way too much. But the average person in the United States between, I believe it's like 35 and 45, has about 200,000 or 250,000 in their retirement accounts. So I mean, what? That's just less than a third of that, 25% of that. If you just put that into Bitcoin, you'll be sitting pretty, to say the very least.
Ah, I love that. I'll add one more question in there because you say like a low amount, like C1 Bitcoin, C1 Bitcoin. How many strategy shares do you need to retire on?
It's a good question. I mean, strategy, I think that is more of a levered bet on Bitcoin. So it's whatever you can stomach on that. I am kind of more intrigued on having something like stretch in your portfolio, just because you can have the monthly dividends coming in to pay expenses, right? So then if you want to go on a more of a lavish vacation or something like that, maybe your kid gets into college and you want to pay for their tuition, that's when you can maybe use something like Bitcoin. And there's all these tools right now where you could borrow against your Bitcoin to pay for these tuitions. And if your stretch shares pay for those monthly payments, then you're basically just paying for your child's tuition or whatever it is, a wedding, lavish vacation, all of these things just through your investments. So I think just getting to that first 100,000 in saving, just overall, it doesn't even have to be all Bitcoin. Once you get through that, I mean, the math drastically changes, because even 10% on 100,000, that's 10,000 a year. That's pretty close to covering some people's expenses over time. Of course, maybe it's not covering everything if you're in some of the Western nations, but it's not too far off. And then of course, once you get that 10% and it just keeps on compounding, I think that's the big number to really try to get, is past that 100,000 mark. And then you can retire on Bitcoin for a low amount and just have that as like a safety net as well. And so I think whatever stretch you need to pay some of that. I mean, I know it sounds like a lot, but I mean, you get $1 million worth of stretch, you're basically getting a 10 grand payment every single month. And that's not too shabby, to say the very least, right? I mean, and most people who retire in the United States, right, they say you need like $3 to $5 million to retire right now. So that number just becomes a little bit more realistic when you look at just the actual retirement numbers. And then you have some Bitcoin on the side, and you can let time do its thing. You can let Bitcoin ride the wave, right? You don't have to worry about the day-to-day price quite as much. And you can have a small percentage of that Bitcoin over time, and that will just absolutely skyrocket your net worth. And there's a lot of these products like we were talking about, with between MSTR and Stretch and Strive, and now SATA, even with a daily dividend, if they're able to keep that up. I mean, all of these products are very interesting, I think, when it comes to helping yourself retire and then ride the volatility of Bitcoin over time.
It's really interesting because I just looked it up. I never looked it up. Average person in the USA, a single person, spends around $3,000 per month, and an average household spends around 6,500 per month, which is huge. Like I did not know that the Americans spend so much. I think the number is different in Europe. I don't know. Maybe I'm just very frugally living. I'm not at that numbers at all. But I'm also don't have a family and stuff. But that's like if you think about that, so you need around 300,000 to 600,000 in stretch. Then we are very far away from the $1 million mark. And maybe you have some other, like you could literally have like 500K in stretch and 500K in Bitcoin, maybe some in leverage play in strategy. You all of a sudden have a portfolio where most of your expenses are covered directly by stretch. And then on the other hand, you have two growth engines with Bitcoin and strategy. Like that's why I'm kind of bullish on strategy a lot. I'm getting there. People be patient with me. I'm trying slowly to get my foot in the door in the strategy world. But I'm really getting very bullish when I see the portfolio things that you can do with it. So you don't only have to get like Bitcoin and like that's it, but you can do with stretch, with income product strategy, maybe a little bit of a growth product that also is in the TradFi world more credible, and so you get cheaper loan rates against that and can borrow against that in a better way than borrow against your Bitcoin, because the loan rates are still not that good with Bitcoin, even though they get better. So like there are a lot of interesting things that you can do on a personal finance standpoint with all those tools.
Yeah, 100%. I mean, the one thing that I will caution you on, Robin, I don't know if you noticed it or saw this too much. Last year, Jamie Dimon and JP Morgan actually had a little bit of an attack on MSTR, where, essentially a lot of the people who held Bitcoin or MSTR, excuse me, through JP Morgan Chase as like, their financial arm, right? They changed their loan to value from like 50% to like 95%, which means basically you need to have, if you want to get $100,000 worth of MSTR or of a loan against your MSTR, you needed 95,000 of that. And that is very rare to have as an asset. Usually it's 50% or lower. And then you saw a big dump off from a lot of the JP Morgan Chase clients because they were like, well, I'm not going to be able to borrow against it. So I need to sell and get into something that I can do that. So there has been some attacks on MSTR with that. And, to be honest with you, I don't know how it's going to turn out with Stretch, if you're going to be able to borrow against that for certain institutions. But there has been little bumps in a road with that. So I will be cautious with some people because, you saw JP Morgan do that. You saw the amount of strategy shares on JP Morgan's balance sheet fall down off a cliff. And then subsequently you saw a lot of, a lot of volatility in the MSTR stock. So I think, when you look at that, obviously that's where the diversification kind of helps you out a little bit. I know, the Bitcoin community and the maxis here think, getting up to 100% Bitcoin is the way to go. And I think long term, if you have a long enough time horizon, sure, that works out. But obviously, like I just lined out here, if you see your net worth go from 120 to 60,000 and you were kind of thinking, all right, maybe at that time we're going to get to 250,000 or even higher. Because I think a lot of the people listening were a little disappointed in the latest bull market. I think, over time, that just helps you weather the storm in the short term, because I think all of us here listening and me and you here talking believe in Bitcoin long term. But it just, like you said, it allows you to get some of that growth engine of Bitcoin, but not have to worry about having to sell off. Right. I mean, we saw a lot of these Bitcoin whales sell off within this past like 10 months or so. And, if they had some exposure, maybe they bought into some of this exposure of STRC and MSTR and things like that in order to retire and just get away from the volatility of Bitcoin, at least in the short term. Obviously, like I said, the long term it's going to win. But, you got to weather some of those storms. So having the ability to use some of these traditional financial products, I think is part of the genius that Seyr has lined out through these past 2 to 3 years of all these preferred products. And now you have the ability to do that yourself as an individual, which, years ago we didn't really have.
Yeah, it's a good point, because like we now just have way more tools at our disposal. So like I want to caution that, because like I'm almost at 100% Bitcoin allocation. I have some cash, I have some small MSTR position, and I'm tinkering around with ESST and STRC. But like most of my portfolio is just like Bitcoin, little MSTR, little bit cash, little bit that and that. But it's nice to have optionality. That's why I also say, if you are a Bitcoiner, you probably should have some cash laying around. And now in the bear market, we all know why. Because you can buy the dip and a lot faster progression. I like the Stephen Perrinot brought it on my podcast, that concept of having 75% in Bitcoin and 25% in cash. And he was not even talking about Stretch at that point. He was just talking about the cash. And he modeled it out. You actually end up with more Bitcoin, because if Bitcoin is ripping up, in his model, he's selling some Bitcoin. I would not do that. But with his model, if Bitcoin is ripping up, you sell some Bitcoin to get more cash. And then if Bitcoin goes down, you acquire Bitcoin with the cash that you have. And because Bitcoin is so volatile, you just end up with more Bitcoin than you start with. Now, I do not sell my Bitcoin, and I don't like that strategy. But it is an interesting strategy when you think about just the cash side of it. So if the cash, like if your Bitcoin position grows so much that you put a little bit more cash into the cash position and don't buy as aggressively, and if it falls aggressively, you have to buy more Bitcoin to keep it at like the 75%. So it's an interesting strategy, I think, like with the dips and the volatility.
Yeah, and I mean, I think, over time, right? I mean, let's just face it, we're still in a fiat denominated world. I mean, you can live in Bitcoin in certain areas, but you're going to need cash at the end of the day to live in most countries. I mean, it's just the reality of the world that we're in right now. But I do think that, like we said, over time, Bitcoin is going to, I think, go through this 50-year cycle. I've talked to Mark Moss a little bit about this, and he's basically lined it out. The first 10 years is institutional adoption, or retail adoption, which we basically saw between 2010 and 2020. Then the second 10 years, 2020 to 2030, that's when we're going to see a lot of the institutions. 2030 to 40, that's where I think a lot more governments. I mean, obviously we've seen El Salvador, Kingdom of Bhutan. Maybe there's some countries quietly stacking Bitcoin that we don't know about. I wouldn't be surprised. I mean, the United States just sees some of Iran's crypto. Who knows how much of that has been Bitcoin? And, that could be a geopolitical play that we start to see in the 2030s to 2040s. And then, I think 2040 to 2050, that's when we'll start to see people really start to understand and maybe get towards the medium of exchange. And then 2050 to 60, that's where we'll probably see it become more of a unit of account, where instead of dollars, euros, wherever country you're at, it'll be denominated in sats. So we're still a little ways away from that, right? So, like you said, if you want to retire now and avoid a lot of that volatility, getting some cash position in your stack maybe will be useful. Keeping some cash on the sidelines will be useful. I mean, let's face it, right? Like I said, you need some of those daily expenses. That's why I like the STRC aspect of it, because, if you have some of that, you will get that monthly income coming in. And that's when you can let your assets basically do the work for you, and you can start to live off of that, opposed to, having to sell your Bitcoin in order to pay rent, or having to sell your Bitcoin in order to go on a vacation or something like that.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.